You've likely heard about stacking gold and silver. But today I'm going to talk about something that's been largely overlooked. Copper. It's affordable, essential, and right now, it's drawing increasing attention across global markets. The question is why? Welcome to Coin Legacy. Today we're taking a closer look at copper, why it matters, and why it's becoming harder to ignore. Copper recently crossed $11,000 per metric ton, a level that reflects growing pressure in the global supply chain. As of early February 2026, copper prices are fluctuating, recently crashing from record highs above $14,500 per ton but showing signs of rebound, with current prices generally hovering around the $13,000 to $13,700 USD per ton range on exchanges like the LME, driven by speculation, mine disruptions, and macroeconomic factors. So why does copper matter? Copper is foundational to modern infrastructure. It is the backbone of electrical systems that power vehicles, homes, data centers, and energy grids. As the global economy becomes increasingly electrified, copper demand grows alongside it. Electric vehicles require significantly more copper than traditional combustion engines. Data centers supporting artificial intelligence and high-performance computing depend on dense electrical networks. Renewable energy systems rely heavily on copper for transmission and storage. Every one of these trends points in the same direction. The challenge is supply. Copper mining is a long-cycle industry. New projects require years of permitting, development, and capital investment before production begins. Existing operations are already operating near capacity. A recent example highlights this vulnerability. The Grubberg mine in Indonesia, responsible for roughly 3% of global copper supply, experienced a disruption following a mudflow event. The impact was immediate. Prices moved higher, and analysts quickly revised outlooks, upgrading major copper producers such as Freeport-McMoRan. This illustrates how sensitive the market has become to supply-side shocks. Now, let's shift briefly from the macro picture to the physical metal itself. This is a 1-ounce copper round, often referred to as a buffalo round. It's a simple, well-recognized design and a tangible way to hold copper directly. It's important to note a key distinction. Precious metals like gold and silver are measured in troy ounces. Copper, by contrast, is measured in standard ounces. So a 1-ounce copper round represents a true ounce by weight. These rounds are commonly stored in tubes of 20. They offer a balance between affordability and physical presence. They remain stackable while still providing the substantial feel that appeals to long-term holders. For us here in Utah, copper also has a strong local connection. The Kennecott Mine, located just outside Salt Lake City, is the largest man-made excavation on Earth. Its scale reflects both the importance of copper and the long-term investment required to extract it. Rio Tinto's continued expansion and capital commitment to Kennecott signals confidence in copper's future role in the global economy. Now let's take a closer look at pricing. Copper is priced by the ton rather than by the ounce. At current levels, copper trades at approximately $13,294.85 per ton. As of February 3 to 4, 2026, the spot price of copper is approximately $5.88 to $6.09 per ounce. As of February 3 to 4, 2026, copper prices are experiencing volatility, with COMEX high-grade copper futures trading around $5.87 to $6.10 per pound. Prices have seen sharp fluctuations due to profit-taking, a stronger US dollar, and concerns regarding Chinese demand, following a recent record rally. So what supports these projections? Global inventories are declining. Supply growth remains limited due to long development timelines. At the same time, demand from electrification, artificial intelligence, electric transportation, and renewable energy continues to rise. The global economy is moving toward increased electrical intensity, and copper remains one of the most critical inputs in that transition. That said, it's important to acknowledge the risks. Supply disruptions such as those at Graberg can be temporary. Central bank policy remains restrictive, and rising copper prices can contribute to inflationary pressures. Demand from China, a major consumer of copper, fluctuates and is currently moderating. Permitting challenges, while slow, do not prevent projects from eventually coming online. Citi's outlook incorporates these factors. Their assessment is that supply growth is structurally limited, volatility is inherent, and long-term demand remains intact. From their perspective, copper occupies a unique position. It is not simply an industrial commodity. It functions increasingly as a real asset tied to infrastructure, electrification, and long-term economic transformation. With producers like Freeport-McMoRan seeing renewed interest, Rio Tinto expanding operations at Kennecott, and multi-decade demand trends aligning, copper may represent a trade and a store of value that many investors recognize only after significant moves have already occurred. Whether viewed globally or locally, copper's relevance is growing. For those who already understand the role of gold and silver, copper offers a complementary position. It does not replace precious metals, but it adds another dimension to physical ownership. It remains accessible, tangible, and deeply connected to the future of modern infrastructure. Thank you for joining us today. We appreciate your engagement and your comments, and we look forward to continuing the conversation.